Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the analysis on EUR JPY, and usually we talk about fundamental analysis before we move right down to technicals, which is going to be purely what will be seen on the chart. Right now, we have seen EUR JPY climb above 14200 landmark on a risk-on impulse and has broken technical resistance. The EUR JPY bounces from the 200-day moving average, and of course, it's set to have a free fall in coming weeks. EUR JPY is neutrally upward biased from a technical perspective, but caution is warranted due to fundamental news, rumors of appointment of Kazuo Ueda to be the new governor of the Bank of Japan has spurred speculations of a hawkish stance and a reversal in the market. EUR JPY bounced from the 200-day exponential moving average and advances sharply towards the 142.00 area, breaking crucial resistance areas in the daily chart. However, it trimmed some of those earlier gains, but remained above all the EMAs at the time of writing. The EUR JPY exchanged hands at 142.02. From the daily chart perspective, while the EUR JPY is neutral to upward bias, though it remains capped by the YTD high at 142.84, a breach of the latter would resume the uptrend and the EUR JPY could rally towards its next supply zone, being a downslope resistance trend line, drawn from October highs that pass around 144.55 to 70s on the 20th of December, which showed a daily high of 145.83. Yeah. So now what to expect? On the other hand, fundamental news surrounding the Bank of Japan could, of course, trigger a downward reaction in the event of an appreciation of the Japanese yen. This has increased the likelihood of abandonment of the yield curve control. Therefore, we will be bullish for the Japanese yen. So what to expect is a down free fall after a series of movements upwards. This has suddenly become an important resistance zone, and we are looking at a downfall to at least 142.322. So if we're to make an entry at this point, I'll let our trade run up to this point. We're looking at nothing less than 90 to 95 pips. So let's say 100 pips on the entry point, which is good money. And an extension to this point, we're looking at 166 pips, of course, which is good money. Now that's our technical analysis on today's currency pair, EUR JPY. Now let's move over to the stock markets. Hello, welcome back, guys. And today we'll be having a look on the stock market. We'll be having a look at First Solar. And for today, we see that the futures traded low after a risk of Valentine's Day. So two of the major indexes finished the day lower. Only the NASDAQ ended the day in a higher perspective. The impetus behind the selling was the consumer price index data, which somewhat unexpectedly rose on a year-over-year basis and came in at 6.4% versus expectations of 6.2%. Now, the core reading, which omits the volatile food and energy data, also was up year-over-year at 5.6 versus 5.5. Treasury yields have been higher across the curve, as sellers came in as the inflation numbers were above estimates. Now, the yield on the 5-year note pushed back to the 4% level, while the 10-year note closed at 3.76%, up from 3.48% just 1 month ago, with the 2-year paper closing at 4.62%, the highest since November. Now, the 2-year or 10-year inversion remains in place. It is seen as a sign of impending recession. But from this, we are looking out from the technical perspective. First support respected, and now also another one close to this first one, which is still around the same 142, 144 zone. So we are looking at a push up at the beginning of the stock market. We are looking at a projection of at least 161.97 in coming weeks, which is about 150 pips from that entry point, of course, which is good money. And that's our technical analysis on today's stock market. I remain your host, Nick. Bye for now.